Tesla closing down 1.36%, and in this video we're going to be covering the $242 million worth of confirmed bearish puts, meaning that big money thinks Tesla's going to continue to drop. We're going to go over all of that. We're going to talk about the exact positions that they entered. We're going to be talking about this bearish setup that's happening on my trading bot and really where I think Tesla's going to end up by the end of the week. We're also going to be looking at the bigger time frames to see if the potential move to $300 is still there. So let's start first with the unusual options activity that ended up coming through today. I posted this on my Twitter/X account, which if you're not following me, you're definitely doing yourself a disservice. I throw free trades over there, tons of free information. Go and follow me right now. I promise it's more than worth it. Looking at this, you can see here in the confirmed bearish flow. This is very important. I talk a lot on this channel about unusual options activities because it's one of the easiest ways to see what these institutions are doing. And these institutions have way more money, way more knowledge, and way more insider information and tools than you and I do. So this is why I put a good amount of importance into these numbers. Now, these are puts that were purchased. These are not people who are selling cash secured puts. That's a bit of an advanced strategy. But for those of you who understand that, this is not going to be a cash secured put on Tesla stock. These are people who actually bought puts, meaning that they believe the stock is going to go down. So $242 million confirmed bearish flow is a lot. If we were to see this number in the 500 to 600 to 700 million number, that'd be very insane, but 250 million is pretty significant. And if we back out to actually look at which ones they're purchasing, you can see here on Tesla's heat map, which I posted on X, that they're really eyeing up $235 to $225. Now, the way that you would read this piece of information, which we have tutorials over on our Discord community, you're going to see that these people are buying puts that expire this Friday. This is what P0 means. So all of these here that I'm mousing over, that's puts that expire this Friday. So they were buying $235 puts, $232.50 puts, and $225 puts expiring this Friday. And they were also buying puts expiring next Friday for, once again, $225, $232.50, and $235. Go over and just take a look now at the 1 hour chart so we can see how price action is looking with these bearish flows coming in. The first thing to note was the break of about $235. This initiated a change of character, which means that now that the structure of that area was broken, there's a good chance that we can continue to move our way down. You can see that we did bounce right here off of our liquidity area, which is $231, and we moved our way all the way back up to $240, which is what we talked about earlier this morning on Twitter and within our Discord community. We watched for this potential rejection, and to be quite honest, this here would have been your time to go short. This would have been perfection, because if you go short here at 238, you have your stop loss set above $241, and your target is all the way down at this liquidity zone. This will give you a 2.5 RVR, meaning that we're risking 1.2% to make 3%. Or if we're risking with options, those numbers will be different. But that's a very healthy risk versus reward ratio with something that's right about 85% of the time. Now, so once we bounced off of this level back here on Friday, the perfect time to go short would have been up at $240 on Friday around 12:30. We saw the drop, the bounce again off of 233, and today we consolidated, showing some false breakouts, potentially moved back up to the 240s, but ultimately we closed underneath $236, and it seems like we'll probably see Tesla continue to move its way down to our target of $230. And even entering puts here at this level of about 235 is more than worth it. We have a risk versus reward ratio of close to 1-to-1 with about an 85% chance of profit. Now, with all of that said, we're going to be looking at something different, because while I think in the next couple of days, Tesla will probably move back down to $230, we actually have a bullish position that's happening here on our daily chart, which I posted over on X earlier today, that my hope is that both of these play out. Both of these could play out, both of these could not play out, but odds and statistics are on our side that they'll both play out. I talked this morning about that 1 hour bearish position that we just covered, but then looking at the daily, we actually have a bullish setup that's happening. So you can see here that when we break through and hold over this level and continue with the trend, we have a 90% chance almost of moving back up into that 255 to 260 level. So what I think is probably going to happen is we'll probably see Tesla move its way back down to 230. We will take profits on the puts, which I don't have, but if you did get puts on the 1 hour, which I showed you, we'd be taking profit and hitting our target level. And then from there, we'd be going long at $230 for probably calls out the next next month, month and a half, since this is a daily time frame. This is going to be much longer time than what we were talking about on the 1 hour time frame. From here, we'd be looking to enter at 229, take profits up at about 255, which is an 11% move to the upside, and set a stop loss down at $218, which is a 5% loss, giving us a 2-to-1 risk versus reward and a 90% chance of profit. So these are the types of trades that I will always take just as a no-brainer. Now, what about the S&P 500? Because how the S&P 500 moves over the next couple of weeks is definitely going to have an impact on Tesla and vice versa. So every Sunday, I post the S&P 500 weekly chart over on Twitter, and we've talked about this bounce off of 416, and we've been watching this resistance level of $460 for about the past week or so. And the reason that we knew that this was going to be a resistance is not just because it was a resistance prior, but we also have a bearish liquidity zone sitting at $460. And if we zoom out, you're going to see we have a beautiful massive cup with a handle formation happening here. And it does seem that in the next couple of months, we should see SPY move its way up to all-time highs around $480. But I do think that in the short term, we can see SPY reject here at $457.52, pull its way back down to about $450. And from there, I'll be looking to go long, taking profits up around $465 and $476, and setting a stop loss down at $435.65. So short term, I'm bearish on the market and bearish on Tesla just for the next couple of days. Overall, I do believe going into the end of this year and the beginning of next year that the S&P 500 will hit all-time highs. And it looks like as long as Tesla doesn't break 220, we should see Tesla move its way back up into 260 and potentially $300. I hope this video helped, guys. Thanks for all of the support. As I say, check out our Discord community. If you want to trade every single day with me, get access to all my trades, all my trading bots that are handmade by myself. It's no ChatGPT garbage. You get access to all my live streams, all of our premium indicators, which is the indicators that you see me use here every single day, going over liquidity, order blocks, etc. Thanks for all the support, and that link will be the second one in the description. Peace.